Quick daily market analysis for Monday, January the 19th. Hi guys, I'm Don. I'm a financial analyst and a trader. American markets were closed for the Martin Luther King holiday today, but we do have reading out on futures, which were down around 1% or so, give or take, across the three indexes there. That's, of course, with the concern over the weekend with Greenland and the Trump administration hitting Europeans with a 10% tariff as they aren't sort of going along with US plans on that territory. As a result there, European markets sold off across the board as traders, investors mitigated risk, and we had precious metals sort of surge as a consequence of that, of investors and traders hiding. We did have weakness across most sectors there, but the auto sector and luxury goods sector got hit the most. And over to UK markets, where stocks fell, but not as much as their European counterparts. That is on the back of the mining sector there, with precious metals help pushing the sector higher as traders looked to sort of hide from risk. We did have the IMF out lowering their 2026 growth on the UK down to 1.3% growth for GDP. That's against the original forecast of 1.4%. And over to Canada's TSX, where the index opened lower but managed to squeeze out a gain. Again, like the UK, that's in the back of the mining sector, with gold and silver stocks powering that market higher through the weakness. We also had a little bit of strength in the energy sector there, with the oil price lifting slightly higher there also. We did have a inflationary reading out for December in Canada, coming in at 2.4% against the forecast of 2.2. The same as November was 2.2, so higher than expected that inflationary rate was. We did have a reading out on annual inflation that came in around 3%. That's not including gasoline, so obviously elevated figures there that might weigh going forward on the Bank of Canada's rate decision.